That's right, Raphael. Payday loan places like this one can be tempting. After all, you can get cash fast. But a Southside man says he learned the hard way about the dangers of payday lending. Mike Webb paints as a way to escape the financial nightmare he's been dealing with for 10 years. The Southside man was a little behind on his bills back in 2007 and needed about $400 to make a car payment.
I saw this opportunity to do a payday loan. It was a quick and easy way to get some money to pay the bills.
Mike handed over his bank account information and got money fast.
It was instant gratification. The bill was paid and I felt great.
But when it came time to pay back the loan, Mike didn't have the money.
I took out another loan to pay that off, and then another loan to pay that off, and then it all just downward spiraled from there.
So it was kind of like a snowball effect.
Exactly.
The interest, finance charges, and fees, it all added up. Mike ended up $12,000 in debt.
And when it was all said and done, my checking account was closed because of so many overdraft fees.
Mike filed for bankruptcy. At the Neighborhood Christian Legal Clinic, attorney Matt Godey helps clients file for bankruptcy. He says half of his bankrupt clients have payday loan debt.
They get stuck into a trap of payday loans because the interest rates are so high. And then they have to take out new payday loans to cover their previous payday loans. And it eventually leads to a vicious cycle where they're going back to the payday loan places, every other payday.
Interest rates can run as high as 400, 500, even 700%.
It's a major problem in Central Indiana.
Federal regulators are cracking down, and payday lenders will have to adhere to stricter rules, including a full payment test before giving the loan, meaning they have to determine if the borrower can afford to repay the loan in full with interest within 30 days. The new rule is expected to face resistance in Congress, and the payday lending industry is fighting back. The Community Financial Services Association of America says more than 19 million American households count on payday and small dollar loans to manage budget shortfalls or unexpected expenses. Godey says payday loans should be an absolute last resort.
Do everything you can before you go to a payday loan place. Ask family to borrow money from. Get a second job.
Mike Webb wishes he had looked for other options. His credit is still recovering a decade later.
My advice would be definitely think twice about it.
Experts say it's a good idea to have a savings account for emergencies. Even a little bit of money is better than nothing. Now, experts say you can also avoid the debt trap by reading the fine print on any loan you take out. You can ask friends or family for help first. Try using a credit card to pay bills. That will have a lower interest rate than a payday loan. Negotiate with your creditors. Many will take a smaller amount if you ask for it. You can also try to negotiate payment plans with your power company, car repair place, hospitals, and other places you owe money. We're live in the West Side. Kara Kenny, RTV6.